evening, traders from across the globe, and welcome to the 775th installment of Short-Term Trading Live with Oscar. Right off the bat, what'd you think of that garbage we produced today? For Trading Tuesday, that is September 20th, 2011. As we know, as we learned today, futures trading is extremely risky and can cause substantial financial loss. Thank goodness for the use of stops. We never trade without stops, and a day like today, trading without stops only gets you choked even worse. So, onward and upward with this week. Traders, I am Oscar Carboni. I spent many years down in the pits on Wall Street, and I've come out of those trading pits to teach you traders the tips, tricks, and techniques that help me guide myself through these markets. And it helps me guide this army of omniacs who follow the omni in and out of these rough and tumble markets. Tonight, what is our video about? Let me tell you, traders, we got an exciting video here. The indices, as any analyst with a pair of eyes can see, are in big bear flags on both the daily and weekly bar charts, but in and out of these rough and tumble markets. Tonight, what is our video about? Let me tell you, traders, we got an exciting video here. The indices, as any analyst with a pair of eyes can see, are in big bear flags on both the daily and weekly bar charts. But how long can the bearishness last? That's what I would like to know. There's a reason why that question is on the board, and in our chart segment tonight, we are going to discuss how long can the bearishness last. Why would I even question the bearishness? We're in a big bear flag in the daily, we're in a big bear flag in the weekly on just about every indice you can find, and I believe that bear flags produce bearish results, and I think the end of this is we go down to complete the bear flag formation. That's over the next few days or weeks to come. But I do not think that will last very long, and the reasoning comes in with the dollar index, the CRB index, and crude oil, and we are going to talk about that. And I am here to say this. When we're done, you will recognize that the dollar index and the CRB index and the crude oil, they amount to one thing. And you know what that thing is? The whole scenario equates to a huge worldwide stimulus package for every country on the planet. And I'm going to show that to you in our chart segment. Traders, with no further ado, I'm not going to waste a moment's time here. Let's delve right into the charts. Okay, traders, E-mini S&P daily bar chart. Let's talk about how Tuesday is going to go based on Monday. Here's a swing day in the E-mini S&P bar chart. It is a bullish swing day. It looks like this. Here's yesterday. Here's today, Monday. It settles up here, rendering that your swing day. What we'd expect on Tuesday is the market to do this. That's what you'll normally get out of a swing day. That's what we have to do at the onset of trading in the S&P on Tuesday. Now, in all honesty and fairness, I don't think that that's the move to make tomorrow. But a swing day is a swing day, and the only way to get accuracy out of the swing day is to take every swing day when it sets up. You do not pick and choose. You do not decide what you think is a swing day. If it qualifies, you take the trade, and if you act in that fashion, then the swing day's high accuracy level will come your way, but you cannot pick and choose. Okay. Monday, swing day gets left in the market for Tuesday's trading. We have no choice but to start this day off buying into that swing day and expecting the rally. If in fact we get stopped out, we will think about going short, and you'll see the reasoning behind going short in a few moments. Now, let's also talk short term about trading NASDAQ tomorrow. We have S&P in a swing day, must be bought. That's the way it works. Swing days have their own rules. NASDAQ. 1 day above the 200 bar moving average because your settlement was here. Second day above the 200 bar moving average, your settlement is here. Third day above the 200 bar moving average and an outside reversal day up, or I should just call it an outside day up. Why is it an outside day up? Its high went higher than Friday's high. Its low went lower than Friday's low, so it made an outside low and an outside high, and it settled towards the upper end, rendering this an outside day up in a very bullish looking bar. So you have 3 days above the 200 bar moving average. That's promising. An analyst buys into that. You have an outside day up. That's promising. An analyst buys into that as a day trader. And you have the S&P in that swing trade. An analyst buys that. So we have no choice but to start off Tuesday morning with buying the NASDAQ and or the S&P. If we get stopped out, we'll start looking at this scenario. So up close and personal for Tuesday's trading, you got to start off buying. Any analyst should buy into that if he keeps his opinion out of the trade. The trade says go long. When you see that, I will not interfere. However, take a closer look at the daily bar chart, and you'll see that it is in a big bear flag for the E-mini S&P. And I say bear flags produce bearish results in the end, and it's a matter of time before this plays out to the downside. When you look at the NASDAQ in the same fashion, you will see that the NASDAQ also has the big bear flag, but it is right here at the 200. Here's the ugly thing about it. You're also very close to the top of the flag, testing the 200. If, in fact, we fail on Tuesday, then this is a failure at the 200. It's what's called a touch to the top of the bear flag, and down will be the scenario. Again, we are starting off Tuesday buying, but this lets us know that the likelihood that we'll end up selling is kind of high. Let's see if the swing day works. If not, bear flags do take precedence here. Next, look at this. Weekly E-mini S&P, big bear flag, big bear flag. I mean, daily bear flag in the E-mini S&P, weekly bear flag in the E-mini S&P. Its only saving grace at the moment is 200 bar moving average. It's building the flag basically above the 200 bar moving average. So this could turn out to not be a flag, but for now it is absolutely unequivocally a bear flag, and we will treat it as such. It is okay to be long inside of a bear flag till you get up here somewhere. Then you got to think about short, and when you get down here you get yourself out until it breaks, and then you go short again, because a bear flag generally ends up in bearish result. So the E-mini S&P has the bear flag on the weekly. The NASDAQ has the bear flag on the weekly as well. But here is where I think things can change. NASDAQ bear flag on the weekly. However, NASDAQ has never breached its long-term channel. This channel goes all the way back to when the market broke down and to make its lows in 2009. This channel goes all the way back to here. We have never really breached it, so it's still within its parallel channel. It does have a bear flag, and we expect bear flags produce bearish results. However, can this really produce a bear market, or will it just give us an end result to a bear flag before bottoming? That's what I think comes our way. Why would I say that? Traders, what would get the stock markets of the world to go higher? A worldwide stimulus package, right? If every country in the world's central bank gave a stimulus package to that country, everyone's stock markets would go up. Well, you want to see a stimulus package happen on the charts? Here's your dollar index. Traders, here is a chart that I've been showing to my Omniacs at my site, livewithoscar.com. Over the past few weeks, I've been showing them that there's a scenario taking place, and that scenario is that this could very well be a bottom taking place in the dollar. Now, this chart we started working on in the beginning of August. All through August, it was behaving the way we expected. Now comes September, it jumps out of August. In September, it gets above the 200 bar moving average and turns into a big bull flag, breaks out of the bull flag, and we are right here, right now, traders. Here's your bull flag. We jumped out of the bull flag, and we're here. We're above the 200 bar moving average, and what we thought was a bottoming pattern is actually turning out to be exactly that. Now, a bottoming pattern in the dollar index, and mind you, this is a chart that we only seen this and this before we thought a bottom was taking place. We started monitoring it at the site and pulling it out in classes. We held it again in a live class today, and we recognized that the bottom is actually coming in. After the third try, it has rallied into a bull flag. The dollar index is bottoming. How could that be a stimulus package to the rest of the world? Let me show you. CRB index. It's got all of these commodities in there. All of these commodities are inflationary. All of this are things that the world needs to create products and or to eat food, right? The dollar index going up creates the exact opposite thing in the CRB index, the basket of all those commodities. It makes the CRB index break down like it's doing here, and it looks like it's going to go further. More than that, it's below the 200 ball moving average and breaking down severely as the US dollar index breaks up. Now traders, it works like this. These commodities are priced in US dollars. They are commodities over here, right? All the different commodities. Well, let's call this a teeter-totter. When US dollars go up, the commodities have to go down. They don't have a choice. That's the way it works. If the teeter-totter moved, commodities would go down while dollar goes up. That's exactly what's happening now. What else is that making happen in the world? Look at what's happening to the price of crude oil. Down, down, big bear flag, down we are going to go further. Crude oil has been getting smashed. This whole scenario amounts to a huge fiscal stimulus to the entire planet. What country is not going to benefit from cheaper commodities and cheaper crude? Every country will benefit. There is no way you can give out money faster to the world than cheap commodities and cheap crude. That means how long can the bearishness last in the stock market? If companies that create the stock market, their stock, if their companies are paying less for the commodities and less for the transportation to move it around, their bottom lines start to do better. If their bottom lines are doing better, their stock gets purchased and it goes up. I think what you are seeing is a fiscal stimulus package that's going to buoy the stock markets of the world before the year comes to an end this year. Traders, pull your own charts, do your own homework, do an assessment of these different markets, and let me know at the site what you've come up with. So traders, you've seen the charts. There's my technical argument for two things. One, over the long term, over the next 3 or 4 months, this whole entire scenario equates to a huge worldwide stimulus package. Why? Cheap commodities, cheap crude, no better way to put money right back in the hands of every country on the planet. That is going to take an effect on our ailing stock market. So what's going to happen? We start this day off tomorrow because of those swing days. We start them off with buying. I have a feeling, however, we're going to end up selling tomorrow because the big bear flags are there. Traders, that's up to the market. Swing day is a swing day is a swing day. This does not exist. This is an opinion. Who cares? The swing day is a swing day. It produces an upward arrow. If the swing day fails, then we'll take another assessment. For now, we're buying for the swing day. Think we're probably going to end up selling, but for now, there's how we start off Monday. That's short term. Remember, slightly longer. This is how we start off Tuesday. Excuse me. Slightly longer term, I think that entire package equates to a worldwide stimulus package. Just think about it, traders. As I said during the chart segment, if your company suddenly was paying less for raw materials to build its product and paying less to get the product out to market, it is going to make more money. If the people who are purchasing your product, the consumers, can get to your product cheaper, their gas is cheaper to get there, they can afford to buy more. These things are magnified when you look at all the people in every country and the entire planet. It happens quickly. So, if this continues, CRB continues down, and crude continues down, the bearishness in the stock market cannot last. It will head back up. So let's keep ourselves long-term focused on the upside, short-term focused on what happens day by day. Start the day off because of the swing day buying, and if we have to, we end up respecting the bear flags. Traders, that's my technical opinion. If you would like to learn how to read these charts, I'm holding an OMNI camp. It's mid-October, this October. If you'd like to come, simply come to livewithoscar.com. Click the big green banner at the top. It's the OMNI Camp application banner. Fill out the OMNI Camp app and you'll hear from me this week. I've already started the phone calls today, traders. If you want to qualify, fill out the OMNI Camp applications. OMNI Camp is a 4-day training session held live here in Vegas with me. And traders, I make sure that you learn all the techniques I can possibly teach you. I make sure you are very well versed in these markets and can call possibly the high and low tomorrow, tonight, before you get out of my presence. Make sure, if you would like to learn to do that, that you come on down to livewithoscar.com and click the OmniCamp banner. From there, the rest will happen when I give you a call. All right, traders, I'm getting out of here. It's early this week. We got a lot going. It's only Monday night. Make sure your stops are always in. Make sure you always keep your emotions out of trading. And make sure you say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Yeah, 775. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.